XRP holders, listen up. May 21st is right around the corner, and you need to be ready. You're probably wondering, what's so important about that date? What makes May 21st a big deal? Should I expect XRP to skyrocket or crash hard? These are the questions that have everyone on edge, especially with how shaky the markets have been lately. Now let's talk about the bigger picture. We've got President Xi Jinping and Donald Trump going back and forth like it's a political ping-pong match. One day Trump's out here saying we just made an amazing trade deal with China, best one ever, and the very next day China's like, we're not even in talks with you. What are you talking about? It's honestly become a pattern. And here's where it gets even more bizarre. Just when you think it's all falling apart, suddenly there's a headline saying China and the US have agreed on terms. Then within days, China threatens to strike back if the US steps out of line. It's like watching a roller coaster that never stops. One moment it's optimism, the next it's doom and gloom. This back and forth between bullish and bearish news isn't just frustrating, it's chaotic. And the markets, they're reacting to every word, every move, every headline. It's hard to know what's real and what's political theater. So why is May 21st significant? Because in the middle of all this geopolitical drama, key financial moves are being planned, ones that could directly impact assets like XRP. And if you're confused about why the market seems so unstable, well, this is your answer right here. To bring you up to speed, just recently, China and the US held a quiet sit-down in Switzerland. They actually agreed on something: reducing tariffs. The US brought its tariffs down to 30%, while China dropped theirs to 10%. Both sides agreed to keep these reduced rates for 90 days. But there's a catch. The Trump administration was crystal clear. If China makes a move they don't like, those tariffs could jump right back up. China, on the other hand, isn't staying quiet either. They've issued a clear warning. They're ready to hit back at the US. And why now? Well, this comes right after the US updated its chip export restrictions. According to China, these changes completely go against the mutual understanding both sides agreed to during the Geneva negotiations I mentioned earlier. Just days after the two nations supposedly struck a trade deal, China is already demanding that the US reverse what it calls serious missteps. Now you might be asking, what does all this political drama have to do with XRP? The answer is a lot. The global markets are tightly linked to international politics. We've seen it time and again. Any tension or shift between major countries hits the financial markets hard. Whether it's the stock market or crypto, your investments are constantly at the mercy of these global power games, and there's more happening beneath the surface. The economy is sending some loud signals right now. The yield on the 30-year US Treasury note has climbed above 5%, and the 10-year yield has jumped another 11 basis points. Bond markets are reacting like inflation is climbing, recession fears are off the table, and trade deals are nowhere in sight. If the Trump administration doesn't step in with some form of stabilization, we could be looking at mortgage rates that stay painfully high for much longer. Think about this. Home prices are already at all-time highs, while actual home sales are scraping the bottom. Add record high mortgage rates to the mix, and it becomes nearly impossible for everyday Americans to buy a home. It's a tough reality not just for the US but globally. Take Japan for instance. Its 40-year bond yield just hit a level not seen in over 2 decades. Japan's own Prime Minister Ishiba has even said the situation could be worse than what Greece faced during its crisis. Their GDP is shrinking again, and they're not alone. Several countries are showing signs of economic contraction, and it all adds up. When global trade slows down, economies shrink, fewer exports, lower production and weaker GDP. These are the direct results of trade wars. Sure, someone usually ends up on top, but that's almost always the country with the most leverage. In this case, the US might actually stand a solid chance, given the size and resilience of its economy. But for now the pressure is on, and the world is watching. Japan's economy is in rough shape right now, and honestly China isn't far behind. Both countries are facing serious challenges. China, for instance, is battling deflation, meaning prices are dropping and people are holding back on spending. their economy is shrinking and the signs aren't looking good. Meanwhile, the global housing crisis is getting worse. In the US, housing has become wildly unaffordable for most people. Let this sink in. 94 million Americans can't even dream of buying a $400,000 home. And that's alarming, especially since the average new home in the US is now priced around $460,000. To put it another way, 70% of American households are priced out of the typical housing market. And it gets worse. Over 53 million families can't even afford homes that cost $200,000 or more. Yet there are only about 22.4 million homes across the country that fall below that price point. That's a huge gap between what people can afford and what's actually available. And this isn't just an American problem. Similar patterns are being seen across Canada, Australia, and parts of Europe. More and more home ownership is turning into a luxury that only the wealthy can afford, while the working and middle classes are left out entirely. This isn't just a housing problem, it's a clear signal of deeper economic issues. We're seeing signs of lower savings, growing debt, and economies that are slowing down or even shrinking. Historically, when situations like this arise, urgent action is needed. The US has a few options: reduce national debt, lower interest rates, or print more money to stimulate the economy. But here's the catch. Printing more dollars means more inflation, and that's something the Federal Reserve wants to avoid, especially while the country is tangled in global trade tensions. The Fed is walking a tightrope. They're reluctant to slash rates or flood the economy with money because they fear it might lead to an even bigger economic mess. But doing nothing isn't exactly a great option either. So what's the right move? That's up for debate, and it really depends on how things unfold in the coming months. But based on history, cutting rates and boosting liquidity is often the only path out of this kind of imbalance. The US dollar might need to be weakened, and cash needs to start flowing again. And it's not just the US doing this. The European Union is already printing money, China's ramping up its own stimulus, and Japan is following suit. It's a global trend right now. Nations are doing what they can to keep their economies above water. The big question is, will it be enough? The US is holding out, but not without a plan. While other nations are being pushed to the edge economically, America is squeezing as much value and leverage as it can from them. Why? Because it still holds the global reserve currency, which gives it an upper hand. The idea is to let other economies weaken first, maybe even collapse, while the US delays action. Then when the pressure finally hits home, they can flip the switch and print money to fuel their recovery. It's a strategic play to maintain control, have more liquidity than their rivals, and potentially scoop up global assets at bargain prices when others are down. That's how the US aims to come out ahead in this high-stakes economic game. Now shifting gears to XRP, things have been wild. The price has been swinging in every direction, and people are unsure about where it's heading.